Hi guys, this is Erica Simonavis with the Robbie Brady team at Allen Tate Realtors, and I am here with Miss Melanie Hatch.
Hi.
So Melanie, tell me a little bit about what you do.
So I work for Allen Tate Insurance. We're a part of Allen Tate, but we're an independent agent. So what that means is we work with a variety of different insurance companies. So we're able to shop for coverage for our clients, not only clients of Allen Tate, but also anyone who needs insurance. So the advantage is, we've got different companies so we can figure out what specific company is the best fit for you. Because not all companies, not all insurance providers are searching for the same thing as far as risk goes.
So, I mean, just as an example, my parents are with, say, State Farm for all of their insurance needs. That may not be the best fit for me.
Exactly. It's all about risk. So each insurance company decides how much risk they want to take on. And, you may not be necessarily in the specific bracket of types of risks that they're looking for. So some carriers are better for, younger, more inexperienced drivers or young couples. Some are better for people who are a little bit more established in life. Some companies want to take on risks when it comes to auto insurance claims or home claims, and others, are just looking for clean, no types of claims on your record. So that's why it's important to shop, because, if I run your information through our rating software, there could be a gap of $1,000, $2,000 from our cheapest company to our most expensive company.
Oh, wow.
It could be that big of a gap.
Okay, so all of those lovely insurance commercials that say they can save you a certain amount, it's likely because it's a person with a different risk factor than the company that they are at currently. Is that correct?
Yeah, you could just not be in the right place at the right time, or what your neighbor may be getting may be completely different than what you would be able to get. Insurance rates are based obviously off of claims history, but they're also based off of insurance scoring. So insurance scoring is a little bit credit-based, but it's mostly going to pull in, different factors about you personally. So it's hard to compare one person's rates to the next. It's very specific as far as you as a person and what you have as far as assets and how much risk an insurance company feels that they're taking on to insure you.
So very cool. Well, let's take a little bit of a circle back. Broad overview, what is insurance for?
Insurance is really
I know, we're going basic, but that's all right.
It's all about protecting your assets. So you want to make sure that the things that you have worked hard for are protected. You want to take on less of the risk yourself and put that more on the insurance company. So if somebody claims that you've harmed them in some way, whether it has to do with an auto accident where someone is seriously injured, or if it has to do with someone coming onto your property, invited or uninvited, or if you are just out in the world and someone claims that you've caused harm to them. If they want to sue you, they're going to get an attorney, and that money is going to come from the liability on your home or your auto policy, depending on what kind of claim it is.
Okay.
So it's making sure that they can't come after your assets because you've got enough protection on your policy to pay for however much their suit is for.
Okay. Sounds good. So now when we're shopping for insurance, I know most people, including myself, want to get the lowest rate, obviously, but are there other factors that we should be really looking at?
Yes, low rates are great, but it's all about finding that middle ground between good coverage and low rates. So anybody can quote state minimum limits. There's so many different things that go into a quote that if you get two quotes from two different people, the chances of them quoting the exact same thing are like slim to none. So it's all about making sure that you've got enough coverage on your policy to protect however much you have as far as financial assets. So what you have may not be as much as what someone else has. So you want to make sure that you've got enough liability protection to cover, whatever your house is worth, whatever you've got as far as investments, any future earnings, they could come after that to get the money. So there's definitely a lot of different things that go into a quote itself.
Okay. So now with that, I'm assuming that it's, like you said, it's different if you had one person quoted versus another person quoted. So now how do you figure out which one's going to be the best for what person?
We here at Allen Tate, we have, rating software that helps us rate very quickly with all of our different carriers at the same time. From then we can get a good idea of which carrier is looking like they're going to be the best option for that particular client. From then we go into the specific carrier's website and we'll run reports. We'll run motor vehicle reports, run claims history reports, fine tune everything to make sure that that carrier is still going to be the best option for them.
Awesome. And then I know you've done this with me before too. You've quoted me out and then explained why the policy is different. And I'm sure that's a huge asset. I'm sure, is that with every insurance agent or is that more with Allen Tate and yourself in general?
I'm always going to try to get a copy of the client's existing declarations pages. That's going to give us a good overview of exactly what's included, because if I can't look at what you've got, it's hard for me to tell you where the differences lie. We have certain, coverage, limits that we feel like are important. So here at Allen Tate, I feel like we're going to quote probably more coverage than what a lot of others do, just because we have, guidelines as far as where we feel like there needs to be some higher limits set. So there's a lot of, like I said, there's a lot of different things that go into it. So you really have to look line by line to make sure that we're putting the same things in. There's coverages that are automatic included in a policy, but there's a lot that need to be manually added in by the agent themselves. So it's really, you're kind of leaving yourself in the hands of the agent who's quoting it. You're trusting them that they're not just trying to get you a cheap quote, but that they're trying to actually protect you.
Absolutely. Okay, wonderful. So now a lot of commercials, things like that, they all talk about bundling. So now what is that and why is it beneficial?
It's really just making sure that your home and your auto policies are with the same carrier, because when you do that, carriers give you really good deep discounts for keeping everything with that particular company. So when you're a renter and you have auto insurance, you're probably not going to see a huge discount on your auto policy for putting everything together. But when you own a home, there's a huge difference in the amount of discounts that they'll give you. So, and it makes your life easier because you've got one place to call, one person to call, hopefully if you have an agent. And then a lot of carriers, if you have a claim that involves both your home and your vehicle, if you have a loss that affects both, then a lot of times they'll waive one of those deductibles.
Awesome.
If you have a claim.
Okay, great. So now, as far as getting quotes, I mean, I feel like the only time myself or most people get quotes is when you have a new car or when you buy a new house. Now, is that good? Should we be doing things more often to kind of check and see?
I would do it at least every year when your policy renews. I had someone ask me that the other day. They're like, am I going to get dinged for moving around too much as far as going from company to company every year? I personally shop my policies every year. I'm going to go where I feel like I'm getting the best deal and where I feel the most comfortable as far as putting the coverage there. So it doesn't necessarily look badly if you do switch carriers. Some companies do give discounts for, the length of time you've been with your current provider. So it could, get you a better deal if the longer you stay. But it's not going to reflect negatively on you. But I would do it at least at every renewal just to make sure that, that particular carrier hasn't had a rate increase over the last year. If you've had like a car accident or put in a claim, that could really affect your rates. maybe that carrier is not necessarily the best option for you moving forward.
Okay, well, great. Now, I know you and I work together quite a bit, specifically when I have buyers that are looking at new properties. So together, we run what's called a clue report. Can you tell me a little bit about that and kind of explain what that is, why it's important?
So CLUE stands for Comprehensive Loss Underwriting Exchange. What it does is it pulls in any homeowners insurance claims that have been made on that particular property in the last 5 years. Now, it's only going to show us the date of the claim, the type of claim, and the amount of the loss. So for privacy reasons, it's not going to tell us, what insurance company it was or the insured's name or anything like that. But if you're a buyer and you're buying a new property, I think you'd want to know if there had been a large water claim or a fire claim or something like that in the last 5 years, because if the damage was repaired, the seller may or may not have disclosed that. They don't have to disclose it if there's no existing damage. So, but you'll kind of know based on that things maybe to look for. I've had some success stories when it comes to claims with buyers. I've had large hail claims come back where roofs hadn't been replaced, and based on this information, buyers were able to get the sellers to replace the roof before closing. I've had prior fire claims come up that were not disclosed. So you can find some interesting things.
Absolutely. And now I know with working with an Allen Tate agent and specifically working with the Allen Tate Insurance agent, you guys offer those to our clients for free. Now, is that something that most insurance agents do, or is that something that just Allen Tate Insurance does?
When you quote a policy as an agent, you're gonna have to run a clue report just as a part of the quoting process. So eventually it will be run, but to run it separately on its own, that's an expense that Allen Tate Insurance takes on for their realtors. So, but I have been told other companies won't necessarily run them. So I won't say any names, but it's not something that everybody's willing to do.
Okay. Well, I definitely see a benefit, and all of my buyers have as well. So that's a great way to kind of just make sure, it's a huge investment. Just make sure you know exactly what you're getting into.
Right, exactly.
Perfect. And then we do also, I usually have you run the flood report as well. Will you tell me a little bit about the flood report and why that's important?
Right, so every property is in a specific flood zone. Now, if you're in a preferred zone, which is called the X zone, that means that if you have a mortgage company, they're not going to require flood insurance on the property. If it's in anything other than the X zone, like AE, that's the most common inland flood zone. When you get to the beach, you start to see zones like V. When you're in the more preferred zone, you can still buy flood insurance, and certainly properties do flood that are in the low risk zone. It definitely happens. For the maximum limits that are allowed by the program, it's a national flood program, you're probably looking at about $450 to $500 a year. And that's going to give you $250,000 in coverage for your actual structure, your dwelling, and it's going to give you $100,000 for your contents, your personal property. So it's just a good idea just to double check. Of course, sellers are supposed to disclose if it's in the high risk zone, but again, it's just doing your due diligence, making sure that everything they said is on the up and up. But in the upstate area, I tend to find there's not a lot of houses in that higher risk zone.
Yeah. And a lot of times we do find too that the structures maybe not in the flood zone, but maybe a portion of the property is. And so tell me a little bit about how that works, at least for Allen Tate Insurance.
Right. So if we get back a zone of X with a little star next to it, that means that part of the property itself is in the high risk zone, but the actual structure is not. Now, when that happens, it's completely up to the mortgage company, if there is one, whether or not they're going to require flood insurance on that property. So if the structure is close enough to that line, then they may require it. But if the house is, a good distance away from that line, you're probably not going to need it. And you would still be considered to be in the preferred zone, and it would still be the same rating as if you were in the basic X zone.
Perfect. And then now, how do they determine how close that line is to the property?
Well, you can see it on the tax records. You can look at the flood, plain, the layering on the tax website, and you can kind of see where that shading, how close it's going to come to the actual property. And like I said, it's a case-by-case basis, and it's each mortgage company. Generally, they tend to not require it if it's in that zone. But I have seen where they've been sticklers about it and asked for the client to carry it.
Perfect. Well, I know you had talked about in the beginning making sure that your assets are covered. So now I heard something referred to as an umbrella policy. Can you tell me a little bit about that?
Right. So the umbrella policy is just extra liability. And that's what I was talking about before, is the liability protection is all about making sure that the things that you've earned and worked hard for are protected. So typically on a homeowner's policy and on an auto policy, we're going to give you, here at Allen Tate, we're going to give you $500,000 in liability protection. Now, if that $500,000 is exhausted, then at that point, the umbrella policy kicks in and it gives you an extra $1 million of protection. So umbrellas you can get in increments of $1 million. So $1 million up to, I think I've seen 10 million before. But you want to make sure that those two numbers together, the umbrella and the liability that you have on your primary policy, are enough to cover whatever you have financially as far as assets. So if 1.5 million is enough to protect you, then great. Otherwise, it kind of goes up from there. $1 million umbrella is probably going to cost you maybe $200 for the year. So if you divide that out monthly for what you get for the amount of coverage, I think it's definitely worth it. It's definitely peace of mind coverage. If you have a pool on your property, if you have an inexperienced driver, any of those things kind of increase your, risk, I would definitely suggest an umbrella policy.
Yeah, I can absolutely understand that. So now I do want to kind of go into, we've been having a ton of crazy weather here in the upstate. And I don't know if you've gotten that too, but if something were to happen to your home, to your auto, what are the steps that you should take?
Well, the first thing is, if you have an agent, the first thing you want to do is call your agent and have a discussion about what kind of damage you have, what you expect as far as, the amount of the loss. You call your insurance company and just start asking general questions, they're going to open up a claim. And whether or not you decide to proceed with the claim or not, it's still going to show as a claim. And that can reflect negatively on you in the future, even if you decide not to move forward with it. So that's one of those advantages of having an independent agent, is you can call them, ask general questions. It's not going to show up anywhere. I always tell my clients, to get an estimate if they're able to. If it's something that's, you've got a hole in your ceiling, you've got water pouring in, of course, your first call needs to be to someone to stop the damage and to stop the loss. You want to be sure that you're protecting the rest of your house as much as you can. So insurance is not meant to, basically be the emergency number that you call. The insurance is what pays for the loss. So you want to call someone that can come out, tarp your roof, get the tree off your house, whatever it is. You want to call your agent, discuss it, compare however much damage you have to the amount of your deductible. Because of course your deductible has to be paid first. So if you've got $1,000 deductible, you've got $1,500 of damage, it's probably not something you want to file, because claims are going to follow you for 3 years, and you're probably going to pay a surcharge on your premium for having that claim. So have a discussion first. If you decide it's something you want to file, then you definitely you call the claims number, get it started. Insurance companies will assign a specific adjuster to that claim, usually they reach out within 24, 48 hours at the most. They come out to your property, assess the damage, make sure that, you know, you've got the appropriate coverage on your policy to pay for the damage. And, you know, most of them will let you use whoever you want as far as a, you know, contractor, you know, to repair things. So.
Wonderful. And then, two, one of the biggest questions we get is a lot to do with trees. And I know Allen Tate came up with an amazing blog post. I will be posting that, but just some basic general information. So as far as like a tree falls onto your property, whether it's actually onto a structure, just on the property, is there a difference between if it was originally on your property or originally on your neighbor's property?
Yeah, there's definitely a difference. Let's talk first about a tree that's on your property.
Perfect.
So of course, if the tree is on your property and falls on your house and causes damage, of course, that's going to be your responsibility to, you know, file that with your insurance company to get them to remove it. And that's if it damages something. Now, if a tree just falls, doesn't damage any property, and doesn't block your driveway or, you know, a handicap, you know, ramp or something like that, if it prevents access to the house, then yes, you're covered. But if it just falls in the yard and nothing's, you know, been damaged from it, that's not gonna, you're not gonna be able to file for something like that. Now, if a tree hits your house and it's on your neighbor's property, it's still your responsibility to file that with your insurance company, because the neighbor didn't intentionally cause damage to your property.
As long as they're not the one that's cutting it down, right? So if this was like a natural disaster came through, like those crazy winds and tornado that we've gotten,
yeah,
this is kind of what we're talking about.
Right. If it's caused by wind, you know, they didn't really do anything to cause that. So you're still going to be responsible for your own damage, and vice versa. If your tree falls on your neighbor's house, that's on them. They've got to, you know, file that against their own insurance policy. Now, if the tree's damaged and you know that it's damaged, if your neighbor has a tree that's like obviously dead, what you want to do is get something in writing and get that to the neighbor saying, okay, that the tree is obviously in poor condition. I think it could possibly damage something. So if something does happen, then at least you've got that in writing that you brought it to their attention. You know, there's a chance that you could possibly have your insurance company subrogate against their insurance company. So that just basically means you file it with yours, then your insurance company, you know, works things out with theirs to hopefully get the money back, so you don't have to pay for it.
Okay.
Your actual policy.
Perfect.
Yeah.
And then we kind of talked a little bit about this, but who is responsible for getting rid of it? So say I have a large tree on my property. It fell on my neighbor's property due to the high winds. No property was damaged. Who's responsible for that?
If it's your tree, then it would be you. Yeah, because if it doesn't damage anything, then insurance isn't going to pay for it. So, you know, you obviously want to keep a good relationship with your neighbor, and I'd probably go ahead and, you know, if it's something that's kind of like, you know, a shared tree, hopefully you can work it out where you kind of split the cost. But, you know, I've had people where, you know, their tree damaged their neighbor's fence, or, you know, damaged their neighbor's house, and they felt badly about it. So they just went ahead and paid for it out of pocket. I mean, technically it's the neighbor's responsibility, but, you know, you want to keep the relationship.
Yeah, usually they're close enough where you want to be able to stop over, ask for a cup of sugar, all those fun neighborly things.
Not fighting over a tree.
Yeah. What is the point in arguing over that? And then as far as like a tree on a property line, do you have any idea of who's responsible for maintenance of that?
That's a good question. I do not know the answer to that. So, yeah.
Well, we'll look that up together and we'll kind of make sure that we circle back around to that.
I think that would probably be another situation of, hey, let's work together on this. And, just make sure that there's not any, branches that are, falling on cars, or, if it's a healthy tree, then, just keeping it maintained, maybe alternate every year or something.
Yeah, something like that. All right. Well, wonderful. Thank you so much for answering all of the questions that I had. This has been amazing, very informative. As far as if someone's looking to get a hold of you to do, have you quote out their insurance, or has any questions for it, how can they best get a hold of you?
They can email me at melanie.hatch@allentate.com. Or they can call my cell, which is 239-218-4275.
Perfect. And I will put that when we post this. And again, thank you so much for working with my technical difficulties. I know that was a little frustrating to begin with, but I very much appreciate your time.
Have a good night. Thank you.
Bye.
Bye.